This is the Good Neighbor Podcast, the place where local businesses and neighbors come together. Here's your host, Jeremy Wolf.
Well, hello, friends, family, wonderful community. We are back with another installment of the Good Neighbor Podcast. You know, if you're anything like me and you've dabbled with real estate before, when you hear the term private money, private lending, private finance, private equity, there's a certain, mystique that comes with it, right? Ooh, private loans. And I think we're like conditioned to learn that, you work to build your credit up, you get your down payment, you go to the bank, you get traditional financing, and that's what you do. And you only seek, private loans if you don't qualify for a regular loan. Our guest today sees things through an entirely different lens. We are blessed by the appearance of Jay Connor, and Jay in many circles has been dubbed the Private Money Authority. So we're happy to have him on the show, and hopefully he can give our listeners some great tips and tricks on how to access the abundant world of private finance and real estate. So Jay, thanks so much for joining us.
Jeremy, thank you so much for inviting me to come along and talk about my most favorite topic that I'm so passionate about, that being private money. And the reason I'm so excited about it is because this is the number one strategy, the biggest strategy in our business since I started investing in single family houses all the way back in 2003. It's made more of a difference than anything else that we've done. And when we started raising private money for our real estate deals all the way back in February of 2009, we've never missed out on a deal for not having the money.
Love it. So let's start with some basics for listeners out there. So for those out there that may not even really know about like what private money is, right? They have ideas in their head. Start there. Tell us a little bit about what private money is and then how that is used with what you do in real estate.
Sure. Well, a private lender is simply an individual, an ordinary person like you and me that loans money out from either their investment capital and or their retirement funds to real estate investors. And so there's no broker involved. There's no middle person. It's a one-on-one transaction between that individual and the borrower, the real estate investor. Now, one misconception that's out there in the marketplace is people and real estate investors confuse the difference between hard money lending and private money. And that's not their fault. You got a lot of hard money lenders, which are institutional lenders that raise money from individuals for them individuals to invest in a fund. And then the hard money lender or brokerage house then loans money out to real estate investors from that fund. Private money in this context is not hard money. This is not institutional money. And the biggest difference, and there's 20 reasons why I love private money, but the biggest difference between borrowing from a bank, a mortgage company, a hard money lender is that traditionally you always think as the borrower, well, whoever's got the money to loan makes the rules. They're the underwriter. They set the terms. But in this world of private money, the opposite is true.
Really?
We set the rules, we set the terms. So instead of applying for a mortgage, I got great news. If you're a real estate investor or you want to be one and you want to use private money, guess what? You're already approved. There is no application because you see, you're not asking for a mortgage. You're not applying for a mortgage. You're offering an opportunity. So there is no asking, no begging, no chasing, no selling, no persuading. You're simply teaching. Have the mindset of putting on your teacher hat, which says private money teacher. And, we've got 47 private lenders that are funding our deals right now. And you don't need 47. I started out with one. But of these 47 private lenders, not one of them ever heard of private money or self-directed IRAs or any of this opportunity until we first exposed them to it, taught them about it, and then they were ecstatic and excited to fund deals.
So clearly you've built a great network of lenders, and what you do is it seems to me like you help investors that are looking to access capital, and you work with them and you use the framework that you created to give them access. But like to somebody out there that is completely new to this, right? what would be like their first steps if they're looking to access private capital? As in, like, what, again, I'm thinking in terms of somebody that maybe they're looking to buy their first house and they're just, or not first house, maybe a first investment property, whatever that is. And they're looking for financing. Everybody just by default goes to the bank. Like, when is the situation where you would want to go to a bank versus when you would want to go out into this private world that you have of finance? Like, what's that distinction there?
Right. Well, with private money, it's so much more flexible, right? As of right now, institutional and commercial rates are actually higher than what we pay our private lenders. We pay our private lenders 8%. We have been paying them 8% since 2009. And there's no origination fees, there's no extension fees, there's no junk fees, as we call it. It's a straight 8%. And so if someone's brand new listening to this show, the question is, how do you start? I can tell you your very first step. And the very first step is to own the real estate between your ears first. What do I mean by that? You got to have the right mindset, which includes confidence, clarity, knowing what it is that you're going to teach. And another big part of the mindset, Jeremy, to get that right is let me ask you a question, Jeremy. I'm gonna put you on the spot.
All right.
Have you ever heard the guru on stage or a real estate investing educator say something like this to an audience of real estate investors that are new? You ever heard it said, oh, just get the deal under contract, the money will show up? I don't know if you ever heard that, but it's out there a lot. Or sometimes they'll say money finds deals. Well, the opposite is true. That's why we practice. That's why we teach and coach our real estate investors. Get the money lined up first.
Capital together. And then all deals are accessible.
I mean, there's always deals. There's always going to be deals. But in this world of how we raise capital, we never pitch a deal. And it's because we first expose and teach the opportunity. You know, what's our maximum loan to value to our potential private lenders, how they get paid, how often they get paid, how they can get their money back in case of an emergency without having a deal attached to that. Because if you're exposing and talking about the opportunity and you've got a deal that you're looking to get funded, you're already sounding desperate without even trying to sound desperate. So this is critical first step. Separate the conversations of teaching the opportunity, what this is all about, and then having a deal for them to fund. I've got a script that's called the Good News Phone Call script that we call up our private lender when we've got a deal for them to fund, and we get it funded 100% of the time. So I'll share that script and I'll turn it back to you, Jeremy. Jeremy, let's say that you are one of my new private lenders, and let's say you've told me that you've got $150,000 retirement account that is in the stock market or in a previous 401k at a previous employer, and you're sick and tired of the volatility. And let's say I've exposed you to and taught you this opportunity, and you love it. You love the 8%. You know you can only get 3 or 3.5% on a CD at the local bank. You love the interest rate. And so you've said, yes, I want to do this. So then let's assume I've introduced you to a self-directed IRA company that I highly recommend, that you can move those retirement funds that you have sitting in an old 401k, and there's no tax effect. There's no tax penalties. You move it over, and now your account's funded, and you're now waiting for the first deal to fund. So I call you up. Here's the good news phone call. You answer the phone. I say, hey, Jeremy, I've got great news. I can now put your money to work. I can put your $150,000 to work. I've got a house in Newport, North Carolina under contract with an after repaired value of $200,000. Now, the funding required for this deal is $150,000, which matches up to your retirement account. Closing is going to be next Thursday, so you'll need to have your funds wired to my real estate attorney by next Wednesday. I'm going to have my real estate attorney email you the wiring instructions. That's the end of the conversation. The most stupid thing I could do is ask Jeremy, do you want to fund the deal? Of course he wants to fund the deal. And there's 3 big reasons why Jeremy wants to fund my deal. Number one, he knows that I'm not going to bring a deal to him to fund unless it matches the criteria of the program that I already taught him. He already knows that my maximum loan to value is 75% of the after repaired value. I told him in the good news phone call the after repaired value is 200,000 and the loan is 150,000, right? Secondly, Jeremy trusted me to move his $150,000 over to the self-directed IRA company. And then thirdly, Jeremy's not making any money on that investment capital until he funds my deal. So the sequence of that, this does not happen overnight. Now, I've got a lot of coaching clients that get $500,000 and $1 million lined up in 30 days or less. But you don't get the cart before the horse. Let's get the money lined up first, and then give your private lenders deals to fund that matches the underwriting that you already taught them.
Interesting. So basically the underwriting for these deals is analogous in many ways to traditional underwriting. It's just all done through independent parties, independent of a traditional lending institution, right? So you have
That's correct.
The network. So you work with folks on two different, if I understand correctly, let me kind of reiterate what I'm hearing here and you can tell me if I got it. So you work with folks on two different sides, right? You have a network of lenders that you work with that produce the capital for the buyers. And then you work with the buyers through a coaching program that you've developed over years and years of operating in this space. And
exactly. So I'm not a broker. I don't fund deals. I simply teach and coach real estate investors how to raise their own capital for their own deals the same way that I've been going about doing it ever since 2009.
Yeah. Makes a lot of sense. Now, were you always, like, prior to 2009, going back through your professional journey, were you always dabbling in real estate? When did you start? What really fueled the interest for you to get into the world of real estate investing?
Sure. So my father, Wallace Connor, who's getting ready to turn 92 years old right now.
Oh, wow.
At one time, his company was the largest retailer of mobile homes or manufactured homes. Of course, you being in Florida, Jeremy, you know what a single wide and a double wide is.
Sure.
Florida was one of the biggest states back in the day. Well, his company was the largest retailer of mobile homes. So I was raised in that industry. And then in the early 2000s, Wall Street fell out of favor with the industry and stopped loaning money to the consumer for that product. So that industry, by and large, pretty much dried up compared to what it was. Well, for years, I've been helping people own affordable housing. So I knew if I ever got out of the mobile home business, I wanted to get into investing in single family houses. And so that's what we did. In 2003, my wife, Carol Joy, and I, we started in 2003. And this was before I knew anything about private money or private lending or even hard money. The only thing I knew to do was go to the local bank, apply for a mortgage or to a mortgage company, never even heard of hard money. And so for those first 6 years, from 2003 until January of 2009, that's all I knew to do. And back then, in the early 2000s, if you had a decent credit score, you could get an unsecured line of credit, for goodness sakes. And but everything changed. Everything changed in January 2009. I called up my banker. His name was Steve. He'd been funding my deals for 6 years. And I called him up, and all of our investments were right around here in Eastern North Carolina. We were flipping houses before HGTV even existed anywhere. And so I called up Steve, my banker, and I had 2 houses under contract for him to fund. And I found out like that over the telephone that my line of credit had been closed with no notice to me. It'd been nice if somebody had told me my line of credit was closed. And I told Steve, I said, Steve, what in the world are you telling me? My line of credit's closed. We've done business for 6 years, always made my payments on time. What's the problem? Steve said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but you just gave me a financial crisis. I don't have a way to fund my deals, right? So I hung up the phone, and Jeremy, I asked myself a very important question that I'll share with you and your audience. As a matter of fact, this question will help solve any problem that anybody's got. I don't care if it's financial, career, relationships, or, no money to fund your deals. And the question I asked myself was, who, it's who, not how, Who do I know that can help me solve my problem? And when I asked myself that question, I immediately thought of a dear friend, Jeff Blankenship. He lived in Greensboro, North Carolina at the time, and he was investing in single family houses. And I called him up and I told him what had just happened, getting cut off with the local bank. He said, well, Jay, welcome to the club. I said, well, I'm not sure I want to be a member of that club, but what club are you talking about? He said, well, that's the club of a bank shutting your line of credit down. He said, they shut me down last week. I said, well, Jeff, how are you going to fund your deals? He said, have you ever heard of private money? I said, no. He said, have you ever heard of self-directed IRAs and how people can use existing retirement account money and they can be a private lender? I said, I don't know what you're talking about, Jeff. What is that? He said, well, there's this gentleman down in Jacksonville, Florida, by the name of Ron LeGrand. I said, who's Ron LeGrand? He said, well, I'm not really sure, but he can teach us about private money. I said, Jeff, for goodness sakes, tell me what in the world is private money? He says, I don't know, but Ron says we can get a lot of it really, really fast. I said, okay.
Sounds good to me.
So I went to my very first real estate investing seminar in January 2009. And in February, I started raising capital. I raised over $2 million in new funding from private investors that had never heard about this opportunity in less than 90 days. And since that time, haven't missed out on a deal. 2 years later, in March of 2011, is when we started our coaching company and started showing other real estate investors how to do this.
I love what you said earlier. You were talking about the mindset, as often is the biggest component to everything in life. And it's funny how the curveballs that we encounter through our lives, the roadblocks, the barriers, in your case, not having access to capital at the time, what am I going to do, right? Where am I going to get money? And that opened the door to what you do now. And a lot of times it's about how we frame things, right? When we encounter those obstacles in life, we can either look at it through the lens, all right, well, another roadblock, I guess I can't do this anymore. Or you could say, this is an opportunity. This is happening. This is a sign. This is happening so that I can grow and open a new door. And when we look at it through that lens, magic starts to happen. Isn't that crazy how that works in life?
That is so true. And as you were summarizing, my story and what happened, it reminded me of Jack Canfield's book, The Success Principles. There's 65 success principles in his book. And the very first success principle is take 100% responsibility for everything that happens in your life. And he shares a formula that I love. And his formula is E plus R equals O. And the E stands for the event that happens in your life, whatever that may be. Maybe you brought it into your life, maybe you didn't, but something happens. And unfortunately, most people are walking around with a different formula. Most people are walking around with the formula E equals O, which equals outcome. They're a victim. They can't do anything about it. Yeah, the victim mentality. But I love Jack Canfield's formula, E plus R. The R stands for your response to the event, right? You got 100% choice as to how you want to respond to any event that's happened in your life. Therefore, you get to be the victor and determine the outcome. The event plus your response to the event equals the outcome. And you're sure right, Jeremy. I mean, if that event had not happened and then I chose to respond to find a better and quicker way to fund my deals, I wouldn't be on your show today.
Yep. I love that. E plus R equals O. It's so true, right? So many of us get hijacked by our emotions and allow externalities to dictate what happens in our own lives. And you nailed it right there with that. We control our own reality, right? Our response. Yeah. Bad things happen to people all the time, right? It's what you do in response to that.
Absolutely. Absolutely. And when people understand that formula, it gives you a sense of freedom because you know that you can respond and take action any way that you want to. And there's a word, action. Right? Knowledge is worth nothing without implementation.
Yes, you do need to do the activity, right? You can't just sit on your couch all day and manifest greatness with a positive attitude. There is a component of actually putting things into action. And it's funny how it works when you start doing the activity, even when you go through it and you're failing and you're up against roadblocks. But if you just keep doing the activity, it's like magic, right? Little serendipity start to occur, little signs, little things, little coincidences start to pop up. And you're like, oh, wow. And it's all due to the forward momentum and the activity, and then just that positive mindset. Yeah, this is good stuff. I like it.
Love it. Love it. So, as I said, private money, it's made the biggest difference. What's interesting is, as I said, it was the beginning of 2009 when I lost my lines of credit at the bank. And if you think back to 2009, that you had all those foreclosures going on. I mean, foreclosures were rampant. And think about this. You got all the foreclosures, and the banks stopped loaning money. So for you to, bid or buy a foreclosure, you had to have the cash because the bank wasn't going to loan it to you. Well, guess what? That's why our business tripled in 2009 when we had access to the private money cash. So it tripled because it was like you had the storm going on, the real estate storm going on, all these foreclosures, banks not loaning monies. So private money was and still is the answer. And, so many reasons why I like private money. There's 20 reasons. I'll just share 2 or 3. One is there's no limit to the number of deals you can do.
That's a big one for me. Let me just stop you there, because in my mind, I've always been confined by how much capital I could access, right? How am I going to get financing for all of this? And I love that this offers an unlimited opportunity for capital.
Yes. So there's no limit. I've raised over 50 million. I normally keep about 8.5 million out on projects, that we've got going on. So no limit to the number of private lenders you can have. And sometimes people ask me, they'll say, Jay, like our average profit on our single family house deals now in Eastern North Carolina are $86,000 per single family house. Well, how in the world does that happen? Well, you got to know how to find those deals. That's a whole nother show. That's a whole nother topic on how you find the deals. But no limit to the number of private lenders. Another big reason I love private money is that when you buy a property using private money and you're buying it at a discount because it needs some renovation or needs some rehab, you always pick up a check when you buy the property. Now let's stop right there. Doesn't that sound different? Traditional loans, you got to bring a down payment to the closing table. The opposite is true in this world. You always get what's called an excess cash to close check when you purchase. And here's my double check. If you cannot pick up a check when you buy, you're paying too much for the property. So I'll illustrate this very quickly in a scenario. Let's say that I'm back to that $200,000 after repaired house, and I'm using small numbers so it's easy to follow. So let's say that you're buying a house that has an after repaired value of $200,000. And then let's say you buy it for $100,000. I do that all the time. In fact, I just closed on a deal yesterday. I bought the house for $67,500, and the after repaired value is $220,000. Well, why did I buy it so cheap? It needs renovation. So back to our example, I want you to follow the cash and follow the money. You got this.
Yeah, I'm with you.
$200,000 after repaired value house. You're going to buy it for $100,000 because, in this example, let's say it needs $35,000 in rehab renovation. So there's the facts. Watch the money. Watch the cash flow. $200,000 after repaired value. You're buying it for $100,000. Now, you can borrow up to 75% using my outline. You can borrow up to 75% of the after repaired value, not of the purchase price, of the after repaired value. So that means you can borrow up to $150,000 in this scenario. So watch this. Your private lender wires $150,000 to your real estate attorney's trust account or title company. Well, there's the $150,000 sitting in the trust account. You come to the closing table. 100,000 of that 150 goes to the seller. Guess what? You're picking up a $50,000 check, excess cash to close, to bring home. Of course, you're going to have some closing costs that comes out of that to your closing agent, but you're bringing home almost a $50,000 check. Now you're going to use 35,000 of that for the renovation. You can use the other 15,000 for carrying cost. If your private lenders needing monthly payments, monthly payment interest, a lot of them let you just accrue the interest and make no monthly payments if you're flipping the deal, and then they get paid off when you cash out. So many reasons, so much flexibility.
Truly fascinating, and I do have tons of questions, but I think we gotta wrap up. We're at the top of the hour here. For anyone out there listening, how could they learn more? Like, what would it look like? I'm sitting here, I'm listening to you, and I like what you're saying. I want to get involved with your program. How do we learn more? How do we get connected with you? What's the best way to reach out?
Sure. So I'll give a couple of different ways. Actually, I'll give 3 ways. We have a novel thing we do here at our office. Somebody dials the phone, we actually pick up the phone and answer the phone. Can you believe? But anyway, I've got a free gift that I'd love to give your audience, and this is called my new $1 million private money scripts. And so I want to give away absolutely free the first script, which is called the Curiosity Opener. How do you even start a conversation with a potential private lender? You can download that script hot off the press at www.jayconner.com/scripts. Download that PDF. Another gift I like to give away, my national best-selling book, is called Where to Get the Money Now. And this has got the actual program in the book that we teach to our new private lenders. It's $20 on Amazon, but don't pay $20 to Amazon. You just cover shipping and handling. I'll autograph it and express mail the book to you. You can pick up the book at www.jayconner.com/book. And then I'm glad to give out my phone number. I love to talk private money. 252-808-2927, 252-808-2927. And Jeremy, I'm sure you'll have all those resources in your show notes.
Absolutely. We will, of course, put links in the description below. Jay, I got to say, I am intrigued myself, and I'd like to continue this conversation with you at a later date and sit down and talk about potentially working together, because this is, for me, real estate investing has kind of always been in my mind as something that I'd wanted to do, wanted to accumulate a portfolio of properties, experience some hiccups along the way in my own life that kind of stopped me in my tracks. And I really have an interest in this. So I'd love to connect with you after and learn a little bit more about how you could help.
You got it. I would love to continue the conversation, Jeremy. Thank you so much for having me.
No, the pleasure is all ours. And thanks, as always, to our listeners for tuning in. Hope you guys gleaned something useful out of this conversation. If you did, please don't forget to like, comment, subscribe. You know the drill. And if you've had your own experience in the private finance world, the private money world, I should say, leave us a comment below. Let us know your thoughts. We're always interested to hear your feedback. So until next time, everyone, take care. Have a blessed day, and we will catch you all next time.
Thanks for listening to the Good Neighbor Podcast, Cooper City. To nominate your favorite local business to be featured on the show, go to gnpcoopercity.com. That's gnpcoopercity.com, or call 954-231-3170.